Hey everyone, welcome back to Corporate Decoder, the place where we dive into the exciting world of proxy statements. Okay, I know it sounds boring, but trust me, there's always some juicy information hidden in these things. Today, we're cracking open H.B. Fuller's proxy statement. Think of it as a sneak peek behind the curtain before their annual shareholder meeting. And this year, we find out if they get shareholder approval on their executive pay structure and more company plans. First, some quick hits. H.B. Fuller is holding its annual meeting virtually on April 15th. This is where shareholders get to vote on important stuff about the company. But before you even get to the voting part, the proxy statement lays out what's on the table. One of the key items up for a vote is the election of 3 directors. These are the people who sit on the board and help steer the ship. This year, Michael Happ, Charles Lauber, and Celeste Maston are up for re-election. Why these 3? Well, Happ is the CEO of Winnebago Industries, bringing a ton of experience in leading manufacturing businesses. Lauber is the CFO of A.O. Smith, so he brings the public company financial experience. He was also an auditor for Ernst & Young, so is good at navigating the financial side of things. Maston is H.B. Fuller's current president and CEO, who has experience as a CEO of other distribution and product companies. Another big vote is to ratify or approve Ernst & Young as H.B. Fuller's independent accounting firm for the year. This is basically a check to make sure the company's books are being audited by a trusted outside source. And of course, we can't forget the non-binding vote on executive compensation, or say-on-pay. This isn't a binding vote, but the company's compensation committee are the board members responsible for deciding executive pay must listen to shareholders' opinions. A final big one is a vote for the Third Amendment and restatement of the H.B. Fuller Company 2020 Management Incentive Plan. This plan rewards employees, officers, and directors. The amendment will increase the number of shares of stock that can be issued under the plan by 2 million shares. If shareholders don't approve this, H.B. Fuller might have to cut back on these types of rewards. So how did H.B. Fuller do this past year? They reported net revenue of $3.57 billion. That's the total amount of sales brought in. Net income was $130 million, but they had a one-time impact related to the divestiture, which means selling off a business of their flooring business. Adjusted EBITDA, which is a measure of profitability, came in at $594 million. They also raised their dividend for the 55th year in a row by over 8%. Now let's talk about that executive compensation. For the CEO, Celeste Maston, about 47% of her compensation is tied to long-term stock incentives, which really aligns her interests with those of the shareholders. One big change for 2024 is that adjusted EBITDA margin is included as a fourth metric along with adjusted EBITDA, adjusted EPS, and adjusted net revenue. This change was made to better align the STIP metrics with the company's portfolio management approach. The short-term incentives paid to the CEO, CFO, and CAO after all factors were considered was 79% of the target amount. Why is H.B. Fuller asking for 2 million more shares for their incentive plan? Well, they say it's because they need to keep attracting and rewarding the best people. The shares will cover a stock-based compensation program is essential in attracting and retaining highly qualified executive officers and other employees and non-employee directors to enhance the success of the company. But it comes at the cost of dilution, which means each share becomes less valuable. So is that a good decision for shareholders? They must ask themselves. It's not all about the numbers. H.B. Fuller is also talking up its efforts to be more sustainable and its commitment to human rights in their business. The corporation says it minimizes the environmental impact of our operations while holding safety as a company value and providing a dynamic and supportive workplace for our employees. Something that always crops up in these reports are related party transactions, but the board has determined that these directors had no direct or indirect material interest in those transactions, arrangements, and relationships. Basically, are there any potential conflicts of interest with people on the board and other companies they're involved with? Also worth noting, H.B. Fuller has a plurality plus standard for electing directors. This means that if a director gets more withhold votes than for votes, they have to offer their resignation. It's like a built-in check to make sure the board is listening to shareholders. The board has determined steps and processes to keep risk management, regulatory and financial risks, and the company's strategy in check. Here's where we find out who owns the most H.B. Fuller stock. BlackRock and Vanguard are at the top of the list. BlackRock has nearly 16% and Vanguard has nearly 12%. It's a good sign when institutions have large investments. Finally, the report shows that Ernst & Young made $4.4 million from H.B. Fuller for audit fees and $1.4 million for tax fees. Now the executive summary. The audit committee members have reviewed all the discussions and financial statements, and based on their review, it is recommended that the audited consolidated financial statements be included in H.B. Fuller's annual report on Form 10-K for the fiscal year ended November 30, 2024, filed with the SEC. So what's the big picture here? H.B. Fuller is doing all right. They're growing and are profitable. They are handing out some generous rewards to the people at the top. One weakness to consider is that executive compensation plans can be hard to interpret. Although they are mostly following shareholder sentiment, the details are complex. The fact that they are increasing shares under the current plan is a potential issue and could lead to equity dilution for investors. One of their strengths is the risk oversight. Ultimately, H.B. Fuller looks like a well-managed company. It's navigating a challenging global economy. It's trying to balance rewarding its executives with making a company profitable for its shareholders. If you found this breakdown helpful, please hit that like button, subscribe, and leave a comment. And remember, always do your own research before making any investment decisions. Thanks for watching Corporate Decoder.